The secret behind how financially successful people manage their money is not about how much they earn. It's because people who experience financial growth always budget to grow. Understanding how to manage your money and being in control of your money is one of the most important life skills we can learn and develop today. In this video, I'm going to share with you the best way to do budgeting, and we are going to do that in 5 important steps. In doing so, we are going to use this budgeting template that I came up with, and I've been using it to manage my money. It is intentionally color-coded Excel file with pre-configured formula for automatic computation, which I decided to call it Growing Me Budget Tracker. If you'd like to use this budgeting template, you can do so by checking down in the description, download it. It's completely for free. If you're new here, my name is Lucy, a finance graduate and a qualified accountant. So let's get started. Step number 1, know your income baseline. So an overview of this budgeting template. This is the income section. You're going to list all your income sources right here. If you have a day job, a side hustle, a freelancing gig, or any other source of income, you are going to list them right here. For the purpose of this video, I will use Kenya shillings because it is the currency of my country and the currency that I am most familiar with. However, you can simply change it to your home currency as I've indicated right here. Just to be more specific, for the day job, put in the figures that land into your account after all taxes and statutory deductions are done. This also applies to the side hustle and the freelance gig or any other source of income that you have. Be sure to put the number net of taxes. Also, there are some employers that normally do pension contribution to their employees, which in most cases is a percentage of your gross salary. So if you are a beneficiary of this kind of arrangement, you will add the total amount that is contributed back to the total income received for your day job. We are doing this in order to get more accurate picture of your financial situation. Step number 2, understanding 1 shilling equal 1 job. Now that we have done that, we are going to split this income into 3 buckets depending on the job you want every shilling to accomplish. There's a powerful concept in finance called zero-based budgeting method. This is a financial planning system that ensures every unit of income is assigned a purpose. Giving every shilling a job will ensure you are in control of your money and not your money controlling you. I'm saying this because I'm a living testimony of what it means to be controlled by your money. Let me take you back to February 2019. Right after completing my high school, I joined the university to pursue my degree in finance. Now, at this time in my country, there is a loan called HELB, a student loan from the government meant to support a needy student. Part of it goes directly to your tuition, and the rest lands into your bank account for upkeep. This amount is supposed to help you survive campus life. Things like food, books, transport, the few basics that are essential for human living. So one fine morning, I received the magical message: you have received 15,000 shilling from HELB. That was about, translated to now, it's about $150 at the time. I looked at the message and thought, wow, I've got money. And more importantly, I've got problems to solve with this money. That money was supposed to last for the whole semester, that is 3 months. But guess what? The amount lasted for 2 hours. I went straight to town, bought new clothes, had lunch at a fancy restaurant because I thought, why not? I have money and future finance graduates also deserve some good food. And by the time I was paying for my shopping bag to carry my purchases for the day, my account politely notified me insufficient funds to complete the payment. 15,000 shilling gone like that, just like that. So I had to borrow money from my friends, and that amount meant that I could only do 1 meal per day for the whole semester. That day taught me one thing: if you don't tell your money where to go based on your priority, it will prioritize on its own and it never picks the smart option. Moving on to step number 3, understanding your requirements. So back to our budgeting template, the 3 splits that we categorized, we are going to do them into number 1, essential needs. These cover your basic and unavoidable expenses such as food, rent, transport, and utilities. They fund your current necessities, these things you can't live without. Essentially, this category fund your present survival. The second one is wants. Now, these are non-essential expenses that make your life enjoyable. There are things like eating out, entertainment, streaming, subscriptions such as Netflix, luxury travel and hobbies, shopping and leisure activities. The little treats that you give yourself to make yourself feel good. They fund your current lifestyle and the personal satisfaction. Essential needs and wants fund your current financial needs. They are the actual expenses. So finally, let's move on to the third category, which is the savings and investment. This is where you pay your future self. It is the money that builds your financial security, your dreams, your freedom. Savings and investment fund your future financial needs. It is the fund that is meant to grow, to sustain you just in case anything happens. Things like emergency fund, circle, investment in circle, investment in stock, investment in shares, extra loan that you took. So every time you get paid, remember this: your income should serve you now, your joy, and your future. Once you understand that, your financial planning will be much easier, in a way that you are able to live a life now that you enjoy and be able to accommodate any eventualities in the future. Step number 4, understand your financial situation. You need to adjust these percentages to fit your unique financial situation. The 50-30-20 rule of budgeting is a simple budgeting framework that helps you manage your income by dividing it into 3 categories, whereby 50% of your income goes to your needs, 30% goes to your wants, and 20% goes to your savings and investment. Just for clarity, let me make an important point here, that the 50-30-20 rule was introduced by someone called Elizabeth Warren and her daughter Amelia Warren in their book All Your Worth, The Ultimate Lifetime Money Plan in 2005. This was during a different economic time. As we have seen over the years to date, there has been rising cost of living and inflation, which has caused spending on needs to rise significantly. Things like housing, healthcare, education costs has really risen to outpace the income growth in many regions. Also, this rule might not be suitable for people with irregular income, because those workers don't have steady paycheck, making fixed budgeting rules harder to apply. For the purpose of this video, I will keep it at 20-30-50 rule for illustration purposes only. Step number 5, fill in your numbers. This template is color coded, and as you fill in your numbers, the colors here will automatically update to show you whether you are overspending or undersaving. So let's dive into the Growing Me budget tracker. At the very beginning of this budgeting template, there is a quote that goes like this: the beginning of financial growth is rooted in budgeting. Budgeting is knowing where your money comes from and where it is used. You can only improve on what you can track. It is intentionally placed at the top of this template, not just to fill space, but to remind you that financial discipline starts right here.